yeah, like you mentioned, it's down 22% in trade today. Almost a market cap erosion of 16,000 crores coming in on IndusInd Bank. But let's go cross and visit our editor-in-chief, Nikunj Dalmia's take on IndusInd Bank in the future.
Suddenly IndusInd Bank comes and says that they have a negative post impact of nearly 2.3% of the total net worth, largely because of internal forex derivative losses. From where has this come? Why this was not disclosed? How come this, in a sense, passed the RBI muster? Because banks are so regulated and they're so well, audited. How come this is something which, in a sense, was passed? So this news is just going to damage the credibility of IndusInd Bank. We got the news over the weekend that Sumant Katpalia has got, instead of 3, a 1-year extension. The CFO place is still vacant. And then on top of that, you have this entire derivative loss. And then 2 quarters ago, it was that MFI shocker, which, shook the market. So needless to say, it's a stock where it appeared to me yesterday that the impact of Mr. Sumant Katpalia's extension would not be very far-fetched beyond 4 or 5%. But I think this would really act as a sledgehammer for a stock where even if valuations are attractive, because now markets would have to reassess their earnings and they would have to reassess the entire book value for the stock for FY26 and FY27. So let me put it very simple. IndusInd Bank has not conducted themselves very well. The leadership crisis continues, the volatility in the number continues. The fact that if this is a loss, which is an internal loss and which has been there for multiple years, how come that was not disclosed? And this will straight away go out of the balance sheet. And if it goes out of the balance sheet, it will have impact on net worth. If the net worth of a bank goes down, it will have impact on the stock price.
All right, so that is the editor's take on IndusInd Bank, and this, remember, just a quick caveat for all of our viewers, that sort of a take was taken just before the markets could open to understand what does it mean for the bank. In fact, I believe Varun is also standing by and to give us a lowdown on exactly what brokerages are saying, what they believe will be the impact of this sort of an 2.3% adverse impact that they are foreseeing on their net worth. Varun, it's not been a great quarter coming in for IndusInd Bank when you talk about Q3. They flagged off concerns then as well. And this one is just coming ahead of the Q4 earnings, a big jolt.
Definitely, it's a big jolt for the company, and yes, brokerage houses have actually downgraded the stock, and there are several brokerage houses who have actually gone ahead and cut price target on IndusInd Bank. Let me start with Nuvama. They have downgraded the rating of the stock from hold to reduce, and they have cut the price target from 1115 to now around 750. They say that the main issue is the timeline, which is discomforting them. They say that the CFO actually have resigned just before the Q3 results. Now you see, yesterday the CEO got an extension of only 1 year. They were expecting the extension to be out for around 3 years, but the extension was less. So that was also worrying, and now this accounting issue that has actually elevated the overall issue for this company. They expect that the overall impact would be on the credibility and also the earnings of the company, and hence they have downgraded IndusInd Bank. If you also have IFL note wherein they have maintained their rating, but they have downgraded the stock from 970 to 910. They say that this would impact the overall PLN of the company, and they are actually expecting the company to deliver a loss in Q4 of FY25. This, adding to the MFI issues, can actually impact the net interest margin for the company in coming quarters. They estimate the CET1 ratio to get impacted by around 35 basis points, although it is still at 14.8%. But yes, this would necessitate a capital raising for the company. So the overall episode would actually impact the credibility and also the financials of the company. And the most important thing is the timeline of this event, which is actually putting the brokerage house into a discomfort zone.
All right, Varun, thank you so much for joining us with what the brokerages have to say. Downgrade coming in from the brokerages. But let's go across and take a look at what the management of IndusInd Bank had to say in the con call that was held last evening.
Expect the closure of the external agency. We believe that should come around end of Q4.
You will see elevated number this quarter, all the flows, and we will also make sure that our 30 plus actually reflects the right, where we reflect what is the normal BU, and we may take some extra hits on account of that. So we should be very fine on our numbers as we go forward from quarter 1 onwards. So quarter 4 should be the bottom of the pyramid on this. We are in discussions as of now. We would actually, I think general reserves cannot be touched, and I think we'll have to take it through the P&L. We started reviewing whatever our internal trade book was, and I think we started observing some discrepancies in our businesses, which was identified by September or October, and then we hired the external agency to start reviewing our business. And that is why we are comfortable that by March end or April early, we should be able to identify the gap, and it seems to be in line with what we are saying, but we want to be very sure about it right now because it's still not validated completely.
All right, so that's the management. They had a con call late last evening, and in that sort of a con call is the clarification coming in from the management. But let's bring on board our guest for today. We have Kunal Bothra on the technicals, while we have Mr. Chokalingam who's joining us on the fundamentals. And Mr. Chokalingam, let me ask you and get your views on this one. For IndusInd Bank, what should actually investors do now? What should they brace themselves for? Should one stay calm and composed and not react to it? Because, you know, over the last few quarters, IndusInd Bank has not given any reason for the investors to be happy about.
Yeah, it's a really big shock, it's shock because it is a nearly more than 2-decade-old bank, and it enjoyed a tremendous valuation on the market. And suddenly, the investors are told that these discrepancies belong to the past. So the question one, why such a long delay? And that's very difficult to digest. Yes, management says the hit will be 2.35% of the net worth. Yes, the bank will be able to manage this, and 1 or 2 quarters they will post losses, and then they will come back. But whether they can get investor support in terms of the valuation, that will be a big question mark. Look at Yes Bank. It used to command even 4 to 5 times the price to adjusted book value. Now it is around 1 time. So similar thing has happened now to IndusInd Bank as well. Right now it's around 1 time adjusted book value, even after knocking out this derivative exposure. So this is a big shock. This is very really difficult to digest for any investors. So what investors should do, should wait and see the final outcome. You need to understand why it happened, how it happened, apart from the financial impact, which is very easy to understand, but you need to understand why it happened, how it happened. That will determine the valuation multiple for the future. So it can shrink and remain below 1 time also if the explanations are not at all convincing. Therefore, one has to wait for the final fine print of this whole episode.
Absolutely, Mr. Chokalingam. It's a wait and watch for the entire fine print of this episode.
If you like this video, then like, share and subscribe to ET Now.